Today I will be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So on yesterday's broadcast, one thing I forgot to mention was the channel break confirmation. And what that means is if you connect the origin of 1 and the terminus of 2, and then you take that trend line and move it to the top, the terminus of 1, that breaking that upper channel is generally good confirmation that a third wave is underway. Sorry, I did that the wrong way. So I connect these 2 points here, move it up to the terminus of wave 1, and as you can see, price moved up and did indeed break that channel. Okay, so I said that the fourth wave would likely be a triangle or a zigzag because the second wave was an expanded flat. And to this point, to me, right here, this move down, that's a zigzag. Well, now the question is 4 over, and we can label it like that, or is 4 not over, and it's going to take a lot of time eating it up, eating time up, that is, in a big, sideways movement, making a triangle. It would have to move up in a zigzag, down in a zigzag, up, 5 waves, A, B, C, D, E. Don't know. We'll just have to wait and see. But per the channeling technique, you can see that indeed it did break and that everything since then is a correction, so another push up is most probable. In addition to seeing the third wave break the channel, what you do is you connect the terminus of 1 and the terminus of 3. You then take that line and move it to the terminus of 2. Now, if the fourth wave breaks this channel right here, then highest probability is that you then dupe the line, move it up to the terminus of 3, that when price starts moving up, because it broke the lower channel, it's going to break the upper channel. And as you can see, although the third wave is longer than 1, it's not tremendously longer. It's not even a 138. Normal for a third wave would be 161 or greater. So, excuse me, I would very much expect price to move up to break this upper channel trend line, and most likely you would see the Fibonacci relationship of 5 relative of the span of 1 through 3 be in some sort of Fibonacci ratio. So 155.47, maybe even as high as 156.87 for the fifth wave to equal the spans of 1 through 3. I think, breaking that upper channel, well, we'll see. You can see that both those ratios lie above the channel. Okay, so now, of course, this is all a 27-minute chart. And as you can see, the movement is respecting, to a pretty fair degree, the Fibonacci resistance that was calculated before the week opened. Found that little groove right there, moved up, found resistance right here at the fourth level, came all the way back, rested on the second level, and it'll probably do that on the way up as well. Moving to a larger time frame, I think this is daily right here. So we were talking about a 57 level, right? 55.40 to 57. And if you remember from previous episodes, I was talking about price getting back to this zone right here, right? This is the span of 2. This is the internal second of the extended fifth wave. Is that right? Yes. So I would expect price to get into that zone, okay? And based on what we see with the channeling technique and Fibonacci extensions, I'd say that's pretty likely. I think we could take out this terminus and move into that 1.56 to 1.578 zone, all right? So look for it to move up. I'm not going to be tweeting any trade advice. You could do the math yourself, and perhaps coming back to the smaller chart, you know, you might find that if you were to go ahead and take a position right now, you would use the terminus of 2 as your stop, and the upper break probably of the channel as your take profit. But that's not a guarantee. So I only like to tweet out trades when I have an extremely hard take profit and stop. But if you're the trader, you're making that decision. I'm providing the analysis. That's today's call. I hope you'll join me again for tomorrow's call.